Hi girls. So let's see the next illustration in chapter 4. Illustration number 16. So let me read the details of this problem as there in your textbook in page number 169. Shiva, a registered dealer, had input tax credit balance for CGST and SGST rupees 75,000 and rupees 1,05,000 respectively in respect of purchase of goods. He manufactured 18,000 liters of finished products. 2,000 liters was normal loss in the process. The final product was sold at uniform price of rupees 200 per liter as follows. Goods sold within state 8,000 liters. Finished products sold in interstate sale 6,500 liters. Goods sent on stock transfer to consignment agents outside the state 3,500 liters. Further, CGST and SGST rate on the finished products of dealer is 6% and 6% respectively. Further, IGST rate is 12%. Calculate the tax liability of SGST and CGST to be paid after tax credits. Okay, so in your textbook he has done it in this way, but I have done the usual way of our calculation. So just like how we have done the previous problems, so like that I have done the same way. Alright, so you can refer this for the solution. So let's start with the solution. So as it is, I am just trying to revise the problem again for you. So already in the problem you can see that the CGST and SGST ITC is given in the problem. So there is no need for you to calculate the same. It's given as 75,000 and 1,05,000 respectively. Okay, so they have given you already the input tax credits, alright, with respect to CGST and SGST. So apart from that, now what you should be doing in the problem, you should calculate the output tax payable, and then you should, from the output tax payable, you should reduce the input tax credit. So firstly, let us calculate the output tax payable. So regarding the sales, it is told that he has sold, okay, 8,000. So it's clearly given that he has sold goods, that is goods sold within state is 8,000 liters. Okay, so in order to calculate the output tax credit, now firstly you have to calculate the output tax credit within the state and out of the state. So firstly within the state, as it is given, he has sold 800 liters, and it's also told in the problem that 200 rupees per liter. The price is 200 rupees per liter. So 8,000 into 200. Okay, so that will give you an output tax payable of 96,000 and 96,000. That is nothing but 8,000 into 200 will be 16 lakhs. So 16 lakh into what is the percentage of tax that is given for you? For both CGST and SGST, it is 6% and 6%. So 6 divided by 100, and the same for 6 divided by 100 for SGST. So we are getting 96,000 and 96,000. So now, apart from that sales, there is also yet another sale that he has made. So you can see the detailing here. Finished products sold in interstate sale is 6,500 liter. And also he has given another detail that goods sent on stock transfer to consignment agents outside the state is 3,500 liters. So both of this is outside the state. Okay, so in your textbook is calculated separately, but I have added both as out of the state supply and calculated together. So 3,500 plus 6,500 is equal to 10,000. So totally interstate sales is 10,000. So 10,000 into 200, because each liter he has sold 10,000 liters totally. So 10,000 into 200, so 20 lakhs into 12%. IGST is 12% because it is out of the state. So 12 divided by 100, you are getting an output tax payable of 2,40,000. Okay, so this is the output tax payable calculation. So calculating all these 96,000 plus 96,000 plus 2,40,000, you are getting a total output tax payable as 4,32,000. All right, so now we have to calculate the input tax credit. So I mean, like, input tax credit is already given. So input tax credit is 75,000 plus 1,05,000. Okay, so which is given for CGST and SGST. So it's not given for IGST. It's given in your problem here. The very first statement says the registered dealer add an input tax credit balance for CGST and SGST, 75,000 for CGST and 1,05,000 for SGST. So let us use it accordingly. Whenever they are not given you IGST credit sales, I mean the credit tax, so it's better we use it for whatever is the input tax credit for that particular that you got. So you pay the tax of that particular purpose. Okay, so here first of all 75,000 is given for CGST. So let us pay that 75,000 for CGST. So if you pay 96,000 minus 75,000, you arrive at a balance of 21,000 which has to be paid. Okay, so then next the SGST ITC available is 1,05,000. So let us first pay, so let us first pay this 96,000. So 1,05,000 minus 96,000, you are paying this entire SGST tax. So there is nil tax available for you. So now from this 1,05,000, if you paid 96,000, you are left with 9,000. So let us pay 9,000 here for SGST. Though SGST you have a big output tax payable, still to the extent of whatever is the availability we are paying, and the remaining balance will be 2,31,000. So if you add both of this, it will tally to this amount, 4,32 minus 1,05,000 and 75,000, you will arrive at 2,52,000. After paying CGST and SGST, you are arriving at a grand total of 2,52,000. That is your outstanding tax that has to be payable. So that's the net tax that has to be payable by this particular individual. So that's the solution for you. So in your textbook he has done it differently. I have done it the same way like usually how we did the other problems. So you can do it anyways. All right. If you have any doubts, girls, if you'll have any doubts, please feel free to clarify. Thank you.